Hi there, this is Alvin from Dr. Wealth. Alibaba just released their results and it managed to grow its revenue by 3% and its operating income jumped by 68%. Yet, Alibaba still went into a loss. As you can see, its net profit is negative. So what's going on? The main culprit here that we are looking at is investment income. Or in this case, it's an investment loss. If you take a look at the segment in the income statement under the income from operations, right, which is the operating income segment, and thereafter you can see the next line is interest and investment income, which they lost $6 billion. Okay, on the most right hand column is in US dollar millions, right? So the interest and investment income actually was down by $6 billion. And with the income from operations, which is just 3.5 billion, you can see that the core operations did not make enough money to cover the loss in this investment income. So that was why Alibaba went to a loss, right? Because after you minus this, there's still more things to minus off, like taxes, like financing charges, before you end up with the net profit line item. So you can see that just after the income from operations, they already went into a loss. So that is the main culprit. And I wanted to see over the years whether this loss is it sizable enough. And I found that since the start of 2020, okay, I wanted to compare the worst of times, which was COVID that happened in first quarter 2020, and you can see all these quarters, right, there were ups and downs, but the most recent quarter, which is the third quarter 2022, the loss that was registered for this investment income segment is the largest ever. It's the largest ever, right? Even deeper loss than when it was in first quarter 2020 where COVID happens, right? So this is not a very rosy sign, right? It seems like Alibaba investments are really not doing very well, and some investors might start to be concerned about it, right? But I want to give you a bit more color to what is going on. What are these investments are we talking about? So it is a mix of public and private investment. It can be some tech companies at a very young stage, right? Or it can be merchant companies that are listed on the stock exchange. So we don't have the complete list of companies that Alibaba invested in its portfolio, but these are some of the public companies that I found, right? Like Weibo, Momo is like a Tinder in China, Xiaopeng is a EV company, Bilibili is a social media platform, 23andMe is a DNA company, right? So on and so forth. Okay, so majority of them are in US because they have to disclose their investments in the US, but for China investment they don't need. Okay, so it could be a case there are a lot more investments in the Chinese listed companies that we won't know, right? Unless we really go and dig in every single company and see whether Alibaba is one of the substantial shareholders there, right? And sometimes they may not even be a substantial shareholder, so their names are also not there. So it's very hard to collate this list, but we just get a sense, right? What kind of investments are we talking about here? So Alibaba is saying that majority of these investments that are listed have dropped a lot in their value, right? It is not surprising because we have seen that China stock market hasn't been doing very well. Or any China-related stocks, even when they are listed in US, they have not done well, and that has caused a drag in the investment portfolio for Alibaba as well, right? So that is the key reason. And not only that, I also went in and dig into their investment in associate. Okay, so these are investments where they have a bit more influence than just a passive shareholder, like what we saw in the investment portfolio just now, right? So for example, Ant Group, which is the largest associated company that Alibaba have, and it is one of the most impressive fintech company in the world previously, I would say, right? And it was almost the largest IPO ever in history until it got pulled out from the IPO process, and thereafter it became the shadow of its former self. And even in the recent third quarter results, you can see that the contribution of profits from Ant Group has declined by 63%. So I would say that the glory days of Ant Group is really over, and the Chinese government has really clipped the wings of Ant Group. And yes, eventually I believe Ant Group will be spin-off and listed as a separate entity, but I don't think it's anytime soon, and definitely it won't be the biggest IPO in the world ever from now on, right? So that is unfortunately a thing that happened. Okay, so don't expect a lot of benefits that are going to come out from Ant Group for Alibaba going forward. But that's it. If we look at the investment value, right, I added the investment portfolio plus the investment associates together, right? I checked the balance sheet for every quarter, and I sum up since the first quarter of 2020, you can see that there was a gradual rise, and since 2022 onwards, there is a decline every quarter, right? And the latest quarter is the deepest decline, right? But yet the current value is still much higher than, say, first quarter 2020. Okay, so that said, it means that Alibaba has still been plowing in capital or investments into these companies, right? Whether listed or unlisted. And I think that is one of the way that they want to maximize and optimize the use of their capital, right? Because the core business is really making money and the growth is slowing, right? So probably they want to make their money work harder, right? To find new growth areas by investing in early stage startups and things like that, right? But of course, given this environment, high rising interest rate and the revaluation of tech companies that are especially loss making is going to be punishing, right? So don't expect this investment portfolio to pay off anytime soon, right? But there could be a possibility that Alibaba might find new growth engines from whatever investing company, because the thing about all this venture portfolio is that you don't need every company to succeed. You just need one or two that makes a big difference for the company itself, right? So there is still a possibility that Alibaba eventually found a winner out of all these investments. Next up is that understand that all these investment losses are non-cash. Okay, non-cash in the sense that they are all paper value, right? The value of the investments have came down and they reevaluate and they took some impairment to the investments and they recorded those as losses. Okay, so they are not actual real cash losses, because if you look at the cash flow itself, it's actually very healthy. I would zoom into the free cash flow, which is the last line over here. You can see that the free cash flow is still positive, right? 35 billion renminbi or $5 billion US dollar. So that is a very sizable cash flow that went into the cash and cash equivalent of Alibaba itself, right? So that's why they are able to afford to take out some part of this $5 billion to invest in other companies. Okay, so that is understand that it's not a cash loss, right? It's just a revaluation kind of impairment losses. Okay, so cash is still very strong in Alibaba. And let's look at the overall performance of their various segments, because Alibaba do have many business segments. Okay, so now we are talking about the core business. We are not talking about investments anymore. China commerce, unfortunately, down by 1%, but for the rest of the segments, they're actually seeing some revenue growth, right? Except for the China commerce side and innovation initiative and others, which is a very small amount, right? It's negligible. So the key one is China commerce over here, which represents 65% of the revenue and is down 1%. But it's forgivable because of COVID lockdowns and things like that, right? China economy slowed down as well. Okay, so I would say that this is okay. And if we look at international commerce, it's a 4% growth from a year ago. This is a bit slower, right? Because if we take Shopee as a key competitor, right, in the Southeast Asia region and some parts of the other parts of the world, has gone up 39%, right? So you can see that international commerce growth is really slower, much slower than what Shopee is getting. And local consumer services and Cainiao, which is a logistic company, has grown well, right? Both of them are in double digit, 21%, 36%. Okay, so that's not a problem. That's healthy. In terms of cloud, this is slow, right? 4% is slow, but this is also in line with Tencent cloud growth of about 4%. I would say that similarly, it is a China slowdown impact that causes even the cloud business to slow down. Digital media and entertainment grew by 4% as well. Okay, so you can see that rather stable kind of performances. If let's say this is normal times, right, when there is no economic slowdown in China, this is not acceptable. Okay, such growth rates are really very slow. It is almost like a mature company that is not growing fast anymore. But given that it is a COVID regulations, restrictions still quite heavy in China, this set of result is not that bad. Okay, because investors would have expected the negative growth from Alibaba possibly, right? But yet it managed to grow in almost all the segments except China commerce, which is just a mere 1% drop. It's not very significant. So I would say that overall the results is not that bad. It's not something that investors are going to be disappointed with, all right? And probably that's why when the results were released, Alibaba went up in terms of the share price in US, right, up 8%, and even the following day in Hong Kong, the share price was also up several percentages. So all in all, in summary, understand that Alibaba net loss is due to the investment losses, and these investment losses are not cash based, they are actually paper losses. The cash flow is still very healthy. They added 5 billion free cash flow in the last quarter, and in terms of core operations, they are very stable, right? Majority of them has growth. from a year ago, except for China Commerce, which is just a mere 1% drop. So it's forgivable because of COVID issues, right? And lastly, as I said, investors would expect higher growth, and once the COVID measures are being loosened, and we see some encouraging signs as well, right? China is starting to make it more targeted in terms of its lockdown or some restrictions, and it is a good first step, and we want to see China open up more and lift all the restriction if possible, so that China companies can start to grow again. That is the key thing about Alibaba, Tencent, as with a lot of other tech stocks in China. Hopefully you are clearer with what's going on with Alibaba in the latest quarter results. Remember to give me a like for this video and subscribe to the channel so that you'll not miss another video like this again. This is Alvin. Goodbye.